let's talk about something that looks super complicated but is actually surprisingly simple. We're going to break down exactly how you can look at any stock chart and get the gist of it in literally 30 seconds. Come on, you've been there, right? You pull up a chart and it's just this chaotic jumble of red and green bars, squiggly lines. It feels like you're trying to decipher some ancient code. It can be pretty intimidating for sure. Well, here's the thing. You don't need to be a Wall Street wizard to figure it out. Because every single one of those charts, it's just telling a story. And I promise, by the time we're done here, you'll know exactly how to read that story. And do it fast. So, if we want to read the story, we've got to start with the alphabet, right? Let's get into the absolute basic building blocks of what you're seeing on the screen. Okay, so this little guy is called a candlestick. Think of each one as a snapshot in time. It could be 1 day, 1 hour, whatever. And packed into that little shape is everything you need to know. Where the price opened, the absolute highest it went, the lowest it dropped, and where it closed. That's it. 4 simple data points. And here's where the story gets really simple. Every single candle is like a tiny tug of war between the buyers, we call them the bulls, and the sellers, the bears. If the candle's green, it means the price closed higher than it opened. The buyers, the bulls, they won that round. If it's red, the price closed lower. The sellers dominated. The color instantly tells you who's in charge. All right, so we've got our letters, the candlesticks. Now let's see how they string together to form words and sentences. This is where we zoom out a little and start to see the bigger story, the trend. You know, really, any market is only ever doing one of 3 things. An uptrend is just a series of higher peaks and higher valleys. You can literally see the buyers pushing the price up. A downtrend is the exact opposite, lower peaks, lower valleys. Sellers are in control. And then you have sideways consolidation, where the price is just kind of stuck in a range, in a stalemate. If you can spot these 3 patterns, you already see 80% of what the pros are looking for. Now, inside those trends, there are certain price levels that are just incredibly important. These are the zones on the chart where the big decisions get made. It's where you can almost see the market thinking. And that brings us to 2 huge concepts, support and resistance. The easiest way to think about it is this. Support is like a floor. It's a price level where the stock has a hard time falling through, because that's where buyers tend to jump in. Resistance is the ceiling. It's a level the price struggles to break above, because that's where sellers usually show up. These are the battlegrounds. And this right here is such a key piece of professional advice. The goal isn't to be a fortune teller. It's to find these floors and ceilings, these support and resistance zones, and then just watch to see what happens. The pros don't predict, they react. Okay, so we can see the trend, we can find the key levels, but how do we get more confident? How do we know if a price move is, the real deal? For that, we use confirmation tools, and I'm going to show you 2 of the absolute easiest and most powerful ones. First up is volume, and I love this analogy. Just think of volume as the voice of the market. It tells you how much conviction is behind a move. If the price moves, but the voice is just a whisper, But if the price moves and the voice is a shout, that tells you something big is happening. So think about it. If you see the price breaking through a major ceiling, and at the same time you see a giant spike in volume, that's your confirmation. That says big institutions are getting involved, and this move has some serious muscle behind it. But if the volume is low, you'll want to be a bit more cautious. Our second tool is the moving average. A chart can look really choppy and messy from one day to the next. A moving average just smooths all that out. It draws a line that represents the average price over a set period, basically cutting through all that noise so you can see the real underlying trend. Now, people use all kinds of different moving averages for short-term or medium-term trends, but honestly, for a quick, big-picture view, the 200-day is fantastic. Here's a super simple rule of thumb. If the stock's price is above that 200-day line, it's in a long-term uptrend. If it's below, it's in a downtrend. It's an amazing at-a-glance guide. Okay, we've learned the alphabet, we've learned how to make words, we even learned some grammar. Now it's time to put it all together into one quick, simple process. This is your 30-second scan. This is it. This is the whole routine. You just ask yourself these 5 questions. 1, what's the trend? Is it going up, down, or sideways? 2, where are my floors and ceilings? 3, does the volume agree with what the price is doing? 4, where's the price in relation to those key moving averages? And 5, what are the last few candles telling me? Are they showing strength or weakness? And when you run through that quick mental checklist, bam, In 30 seconds, you have a really solid handle on the situation. You'll know if the stock is strong or weak, trending or just stuck, and whether it's sitting at a critical spot where a big move could happen. You've just read the story. Because that's really what this all is. A chart isn't just data points and lines. It's a story of human emotion, of fear and greed, hope and uncertainty, all playing out in real time. And once you learn its language, you'll never see a chart as just squiggles again. So the chart is talking. The only question is, are you ready to listen?